Looking at the S&P 500, it's up about 23% year to date. Solid performance there. You look at the equal weighted S&P up about 15%. So again, some underperformance on the equal weighted index. The question is, will we see some broadening out and maybe even some more broadening out in performance of the S&P 500? Let's talk to somebody who is in charge of this stuff. Phil Palumbo, he's the founder, he's the CEO, he's the CIO. I think that makes him the boss at Palumbo Wealth Management, the name on the door. Hey, Phil, should we expect this market performance to broaden out here, or do we just sit, own the Mag 7? How do we play this market from here?
A couple of things. First, the market in the short term, I think, is overbought. And, you have forward multiples at 23 times. And at those levels here, I think that with new capital, you definitely have to dollar cost average in here, over the short term. And then I think volatility will pick up as we get closer and closer to the election. So in the short term, I think we're overbought. But thinking out, going out 12 months, there are two key things that I always look at. Number one is what are earnings estimates? And earnings estimates are around 9-10% for 2024 and about 12-13% in 2025. Even if earnings estimates are off by 7 or 8%, which is about the average they are normally off, you still have a positive backdrop as it relates to earnings estimates. And the second most important is, what's the Fed thinking? So obviously we have a Fed that's now accommodative, which is a change versus March of 2022 up until the last decrease in interest rates. And that's another positive, favorable backdrop, and as long as we don't have any type of recession, which we're not anticipating. So Paul, for those two reasons, I can see stocks continue to perform well as we move into 2025.
Phil, let me ask you about AI. And so we're talking about broadening out. There was so much interest in artificial intelligence, the degree to which it intersected with these other big tech stocks. We've been kind of waiting for the moment when that jumps to other companies, and we see the broadening just in that space alone. How are you thinking about AI now? And when you look at that broadening out, how much of it is going to intersect with or involve AI technology?
Yeah, so people have to understand that from the AI standpoint, there's tons of investments in hardware, which will eventually go into applications and software. That's kind of the next phase of this. So right now, when you think about the Mag 7, which you asked about, right, you're still seeing great growth in those stocks. And those are great businesses that will continue to be great businesses, for the long term. So I still continue to see, positive growth in those particular businesses. Right now, what I think makes a lot of sense and kind of the way we look at things is I do see a broadening out happening if you look at the last 6 months, you've seen mostly value right now in line with the S&P 500. So I see a barbell approach where you have kind of a core group of stocks is the way we run money. We got quality businesses, lots of free cash flow, high returns on invested capital, and you barbell that with the Magnificent Seven, because this artificial intelligence is going to be bigger than the internet. It's something that is going to be explosive, I think, for the economy, explosive for companies that are going to be instituting AI into their businesses to increase productivity, increase margins. So I think we're in the beginning phases of this, and we can continue to see this going forward. Now, listen, is there going to be a day where NVIDIA is going to go down 50% and some of these other businesses? Yes, it's going to happen just like back in the late 90s, right? But overall, these are attractive spaces, and they're going to go through the cyclicalities and the ups and downs of the markets like any other time frame.
Hey, Phil, for those folks that are maybe looking for value in this marketplace, one of the industry sectors I've heard of is just kind of broadly defined healthcare. How do you guys think about healthcare, and how do you break it down into some smaller parts?
Yeah, so healthcare is a very attractive space for a couple of reasons. Number one, you have an aging population, right? Number two, you have a lot of these companies are flush with capital, right? So J&J is a business that we currently own right now. They're estimated to have $20 billion in free cash flow over the next 3 and 4 years. Pfizer, same thing. So a lot of these businesses are flush with free cash flow, which means they have the ability to buy back stock, make mergers and acquisitions, make acquisitions. So J&J bought a rare disease company called Momenta, $6.5 billion. And rare disease space is an area that we're going to see really some nice growth in that particular space. So these businesses have come down in valuations because investors have moved away from healthcare and the more defensive areas and into technology, which makes obvious sense because that's the area that's really grown from an earnings perspective. But healthcare over the next 3 and 5 years, especially at the valuations they're at right now, because interest rates up and regulatory issues that surround that particular space and more normalization post-COVID, they've come in at attractive levels. And you think about the future of healthcare, I think it's very, very bright, especially with the medical advancements now with AI. So very attractive at these levels.
Paul, I'll put a shameless plug in here, but I spent some time with Joe Walk, the CFO of Johnson & Johnson, the CEO as well, Joaquin Duato, and we talked a lot about...
And where are they based? Oh,
in New Jersey.
Thank you.
We talked a lot about what Phil is mentioning there. That is how they're facing these patent cliffs,
Yep.
how they're looking at merging these kind of biotech and pharmaceutical businesses. So I commend you to the Chief Future Officer show I did with the both of them. But Phil, let me ask you about the health of the consumer today and how you're thinking about that. Callie Cox here just a moment ago talking about how when she looks at the earnings that we've gotten from financials thus far, she's largely in agreement with what they're saying about the health, the resilience of the U.S. consumer. Do you feel similarly, and how's that kind of shaping your perspective on stocks that you find attractive?
Yeah, for some reason, you can never count the consumer out, right? No matter how many times that analysts and research that we read, is trying to count the consumer out, for some reason, they continue to push forward. You looked at the retail sales is very positive. The thing that I'm concerned about was the labor market starting to cool. But the last print that we saw was actually pretty positive. So the rate of change in terms of the job market started to decline, scared people, but then the last print was pretty positive. So keeping an eye on that obviously is going to be important. As long as people have jobs, they have the ability to spend, and the retail sales numbers prove that. So, and then the second thing is the capital and money from COVID, and we're starting to see that as pretty much diminished to zero. So the question is will the consumer continue to have firepower? And my view is it's something definitely to look at, and the jobs market is the number one thing that we're going to continue to look at. But for right now, they remain resilient.
Hey, Phil, back to healthcare. You mentioned biotechs. Let's be honest. All you do is throw darts at a dartboard when investing in biotech. How do you try to figure out how that stuff works?
Yeah, so it's definitely a very difficult environment to get it right and pick the right businesses. So we feel we do have it right? So we have an emerging growth strategy, which is the Palumbo Emerging Growth Portfolio. And within that portfolio, 50% is biotech stocks. Wow. And we hired and partnered with a portfolio manager who manages a hedge fund. And he's been in this space his entire career. He had a pharmaceutical company himself, and he sold a pharmaceutical company. He invented a pharmaceutical drug, again, which he sold. And so he understands the FDA process. He understands management is the key to picking the right businesses, and he can see right through management. So if you have the right person on your team, that's really the key. But it's, Paul, to your point, it's definitely not easy, but he does a great job. He's got a proven track record, and we really rely on him to get that right.
Yeah, it's when I look at the biotech stocks, I'm just seeing in the news every day. It's binary. Either you win, and then you win big, or you lose, and then you lose it all. So Phil Palumbo, hats off to you, Phil. Phil Palumbo, founder, CEO, and CIO of Palumbo Wealth Management.